Dear students, in the previous session, we have discussed the direct method of preparing cash flow statement. And in this session, we are going to learn preparing the cash flow statement under indirect method. I already mentioned that the difference between direct method and indirect method lies only in one activity, which is operating activity. Before I discuss the indirect method of preparing cash flow statement, let us take up an example to understand the concept. Let us say cash sales of rupees 100 lakhs, cash purchases of rupees 60 lakhs, cash paid for salaries rupees 10 lakhs, rent rupees 12 lakhs, and other cash expenses paid 8 lakhs, depreciation 5 lakhs, interest income 6 lakhs, provision for tax 4 lakhs. I am just giving random figures for us to understand. Dear students, pause the video. Can you tell accounting profit from this information? Trading and profit and loss account. By sales 100 lakhs, to purchases 60 lakhs, to gross profit balancing figure 40 lakhs. By gross profit brought down 40 lakhs. By interest income 6 lakhs. To salaries 10 lakhs. To rent 12 lakhs. To other expenses 8 lakhs. To depreciation 5 lakhs. To provision for tax 4 lakhs. To net profit balancing figure 7 lakhs. This 7 lakhs is called accounting profit. Now, if I ask you what is cash profit, from this information, will your answer still 7 lakhs? The answer is no. If we have to calculate cash profit, then we will take only those items which are related to cash. So, our cash sales 100 lakhs, add cash interest income 6 lakhs. So, total is 106 lakhs minus cash expenses, purchases 60 lakhs, salaries 10 lakhs, which is again in cash, rent expenses, which is also cash expenses 12 lakhs, other cash expenses 8 lakhs. Now, depreciation of 5 lakhs, should we minus depreciation here as an expense? The answer, depreciation is an expense, but if we need to calculate cash expenses, we should not consider depreciation because depreciation is non-cash expense. So, if we want to find out cash profit, we should consider only cash income and cash expenses. Dear students, tell me, is provision for tax is related to cash? The answer is no. The tax liability which is arisen but not yet paid. So, we should not consider provision for tax and depreciation because they are non-cash expenses. So, our cash profit is how much? 16 lakhs. We will not consider non-cash item. Therefore, our cash profit is 16 lakhs. Now, same answer 16 lakhs. We can get it by one more technique, that is indirect or reverse technique, but not in this way. We will do in a different way. What we will do is, that is 7 lakhs. Now, we will add back those expenses which are not to be considered because we are finding out cash profit. We will add back non-cash expense like number 1, provision for tax 4 lakhs, number 2, depreciation 5 lakhs. Now these are two expenses. Now if you add back, what is your cash profit? 7 plus 4 plus 5 equal to 16. The same answer. We started with add back non-cash expenditure. You will get cash profit. The same figure, but the way of doing is different. Now if I ask you what is cash profit from operating activity, will your answer remain still 16 lakhs? The answer is no, because in all this cash profit calculation or accounting profit, there is a one item which is cash item, but which is a non-operating, which does not relate to your business, and that is your interest, and that is your interest income. Suppose you invested in fixed deposits and in return, you're getting interest. That's not your business. That's your investing activity. So, this cash income, 106 lakh, no doubt, it's a cash, but it does not relate to operating activity. So, what should we do? The cash profit, which we have calculated 16 lakhs, from 16 lakhs minus interest income. Sir, why are you minusing? Because interest income, though it is a cash item, but it is not related to operating activity. So thereby that income should not consider here. Cash profit from operating activity is 10 lakhs. I hope you have understand how accounting profit, cash profit and operating cash profit are calculated. Now we will go over the operating cash flow formula and format for the indirect method. In indirect method, there are 3 steps to calculate cash flow from operating activities. Step 1. We need the business net profit or net loss, which we can find in the income statement or profit and loss account. This method is focused on starting with a profit. We take net profit for the year as cash inflow. We show it as a positive item. A question may arise in your mind, sir, in case loss during the period, what we have to do? Dear students, suppose it was net loss, we will show it as a negative item. Sir, profit means positive, loss means negative. You are absolutely correct, my beloved James. Now, elimination round. Some adjustment to be made to our profit or profit after tax. Before going forward, I would like to remind you one important aspect that will help your understanding. I give you simple example. In profit and loss account, there will be sales, purchases, all direct expenses, indirect income, everything is included in arriving this net profit. Now tell me, what is the net profit you are getting? 10 lakhs. This net profit will trouble you, but this will lay down roadmap of the indirect method. Please pay attention. Where do you get net profit? From Google Pay. Where is net profit available? In P&L account. Bro, P&L account how to make I know since 11th standard. What are you going to teach me for 10 to 16 marks? How to find operating cash profit. This is the net profit you picked up from profit and loss account. Profit and loss account is very complex in nature. I would like to call it as Bade Dilwale, big hearted. So in this profit, all things are included. Sales, purchases, all direct expenses, indirect income, everything is included in arriving this net profit. Profit and loss account is prepared using the accrual basis, which means expenses are recorded as they are incurred, not when cash is paid, and revenue is recognized when it's earned, not when cash received. Any expenses which you have debited in P&L account, just answer what I am asking. What does this do to your profit figure? Reduce the profit. Any income which you have credited in P&L account, increase the profit. So what we should do? Step 2. In this profit, several incomes and several expenses are included. So if there is any non-cash expense which are not resulting into any cash outflow, add back those like depreciation, provision for tax, goodwill written off, preliminary expenses, miscellaneous expenses written off. All those non-cash and write-offs which does not result into cash outflow should be eliminated. It is not merely plus, it could be plus or minus, and minus that income which is not related to operating. For example, for arriving such profit, I would have deducted interest as an expense. Interest what I have debited in P&L would have been paid. It is a cash item. Then why you eliminate, sir? Because it is not an item to come in operating. It is an item to come in financing. So thereby that interest will be added to the net profit, because this profit is after interest, which means we have reduced that interest in arriving this net profit, and we are going to say this is our operating cash flow. So the interest which is already reduced from the profit, add back. Dear students, if you are a CA or CMA or CS or a graduate student, I will link up this concept to PGBP. While solving the PGBP sums, we will eliminate other heads of income and expenses. We will eliminate other heads of incomes and expenses in the same way we are eliminating here non-cash and non-operating income and expenses. If you take the net profit, all the incomes and the expenses, any income which is included in the income side shall be eliminated. How to eliminate? Deduction or less, because in net profit it is already added. Now our operation to be deducting. This interest, whatever taken on debit side, was already deducted in arriving at the net profit. What we should do? Add back. So in this way, non-cash and non-operating items shall be eliminated in this profit. Sir, what we achieved by doing all these adjustments from net profit, we are converting those profits which was received in cash and which was operating. Step 1, net profit for the year. Step 2, adjustment of non-cash and non-operating income. Step 3, working capital adjustments. Dear students, in the next session, we will go over step 3, working capital adjustments in depth using logic, and you will see how simple the indirect method is.